Hey guys, welcome to my YouTube channel. In this video, we will do a fundamental analysis of ITC. If you are thinking to take position in this stock, then this video is worth watching. In this episode, we will go through its business model and company's last 5 years performance. And also, at the end, I'll share my personal opinion on this stock. So, let's get started with its business. ITC is a conglomerate company, that is, it is involved in many businesses. Number 1 is its cigarette business. This business is its largest contributor in terms of revenue. Some popular brands of this segment are India Kings, Flakes, Classic. Number 2 is its FMCG business. This segment includes consumer goods, stationery items and personal beauty products. Some popular brands here are Ashirwad Atta, Bingo Chips, Epi Noodles, Dark Fantasy Biscuit, Classmate Notebooks, Mangaldeep Agarbatti, Savlon, Vivel. Number 3 is its agribusiness. Here it grows wheat, tobacco leaves, coffee, spices, soya. The commodities grown here or procured from the farmers here are even exported to foreign countries. Number 4 is its paper and packaging business. This involves processing of paper and packaging materials. Number 5 is its hotel business. It has around 109 hotels in 73 locations. This is the worst hit business in financial year 21 due to coronavirus. I will discuss about this later in the video. And the last business is its other segment, which involves IT services, branded residencies and other small businesses. Overall, it is a large conglomerate which is involved in a wide variety of businesses. The other thing to notice here is not all businesses are independent. They are one or the other way linked to each other. Like cigarette business is dependent on agribusiness. This is where it gets its tobacco leaves. Products of FMCG businesses like Ashirwad Atta, Bingo Chips are again dependent on agribusiness for wheat and potatoes. All segments' packaging needs are fulfilled by paper and packaging segment. So it can be said that segments are interconnected with each other, and this is the reason why it is difficult for ITC to demerge. For investors, this is a negative signal. Now coming to its revenues, in financial year 2021, 38% of its revenue came from cigarette business, 25% came from FMCG business, 22% from agri, 9% from paper and packaging, 1% from hotel business and 4% from its other businesses. On profit wise, cigarette business contributed 83% of overall company's profit before tax. FMCG contributed 5%, agri contributed 6%, paper and packaging again 6%, other businesses contributed 3%. In hotel business, it actually made a loss of 563 crores in financial year 2021. This decreased its overall profit by 3%. The main reason was pandemic. Due to pandemic, it shut down its hotels. On the other hand, it was still having expenses like maintenance and property cost. So, hotel made a loss. The other thing to notice here is cigarette business, which has a 38% share in revenue, contributed 83% of overall profit before taxes. Cigarette business is the cash making machine for ITC. On the other side, FMCG business, whose revenue share is 25%, has only contributed 5% of overall profits. This is because most of its FMCG products operate at very low profits. So even though they bring revenues, they still make very less profits. In financial year 2017, the revenue of the company was 42,776 crore. And in 2021, the revenues were 49,272 crores. On a 5-year CAGR basis, revenue have grown by just 2.86%. This is a negative sign. Profit-wise, in 2017, the net profit of the company was 10,471 crore, and in 2021, net profits were 13,389 crore. So, they have shown a growth of 5% on CAGR-wise. Again, this is a negative sign. Now coming to opportunities and concerns in this company, here in this table I list out all positives and negatives for an investor to consider here. Firstly, let's talk about positives. The company holds a strong balance sheet. Its assets are huge when compared to its current liability. Overall, it has a solid balance sheet. Number 2 is the company has no debt. So it is a debt-free company. Number 3 is it is a market leader in cigarette business. Most of its cigarette brands are number 1 brands. Number 4 is its interconnected business model. The interlinking helps it in cost reduction and increase the profitability. On the other side, this interconnection is becoming a concern. I will discuss about this in my opinion. Number 5 is the company has a good track record of dividend paying. In the financial year 2021, the company paid 10 rupees 75 paisa as dividend, which is almost 5% of the company's current price. Number 6 is the company has 110 years of experience, so it is a matured and well-established company. Now, coming to its negative factors. Number 1 is revenue performance. In last 5 years, as we saw earlier, revenues have grown by just 2.86%. This is very less growth when compared to its competitors. Secondly, net profits on 5-year CAGR basis have grown by just 5%. Again, this is not a good number. Number 3 is its low operating margins in FMCG segment. It has around 4% of operating margin in this segment, which is very low. The reason for operating at such a low margin is many of its FMCG brands are competing with market leaders. Like ITC's Bingo is competing with PepsiCo's Lay's, which is the market leader. Savlon is competing with Dettol. ITC's Dark Fantasy Biscuit is competing with Cadbury Oreo biscuits. ITC's Epi Noodles is competing with Nestle Maggi. So presently its products are competing with market leaders in FMCG segment, and any increase in operating profits will impact its revenue. Number 4 is its ESG norms. ESG stands for Environment, Social and Governance. Since it is majorly involved in tobacco business, many institutions and mutual fund investors consider this a harmful to environment. So they keep themselves away from investing in such companies. And due to this, we don't see many institutions and mutual fund houses investing in ITC. Number 5 is taxation on tobacco. Currently on cigarette products, a 64% of excise duty and 28% of GST is applied. Many organizations are pushing government to still more increase the taxes. The present taxation on tobacco is very high, and any increase in taxation will impact companies' profitability. Now, coming to my personal opinion, I am personally having a neutral or slightly bearish view on this stock. The reason for this is its increased taxation on tobacco business and its complicated interdependent business model. ITC is trying hard to demerge, that is, separate its businesses. Because of its tobacco business, other segments like FMCG are not getting properly rated. The PE ratio of ITC stock is 15, whereas PE ratio of other famous FMCG companies like Hindustan Unilever Limited and Nestle is above 50. So FMCG segment of ITC is not valued at a good price. And also its other segments like agri and hotels are valued at very less price. Until and unless they are sharing portfolio with tobacco business, institutions and mutual funds will not be investing much in this company. So the company will be valued at very less price. On the other side, the businesses are strongly interdependent on each other. Like we saw earlier, cigarette and FMCG department are dependent on agri. And if separation happens, then profitability of the segments may decrease. So ITC is currently in a complicated situation. If we see its stock price, in 2013 it was trading around 220 rupees and presently it is trading around 210 rupees. For 8 long years, the stock has showed no momentum in its price. A person who would have bought this stock in 2017 would have made no money except dividends. If we consider a bank FD, it will fetch more returns than the ITC's dividends. Until and unless there is an investment from institutions and mutual funds, we won't be seeing price appreciation in this stock. So at present, I am personally having a neutral or slightly bearish view on this stock. This is my personal opinion. Please don't consider it as a buying or selling recommendation. Hope this video was informative. If you liked the video, then do hit the like button below. Thank you.